kindergarten. When you borrow at the beginning of the month, that algebra gets to be messy. But look what I said. Look what I said. High school. All it is high school algebra. Two unknowns. Two unknowns. Two linear equations. Two unknowns. And I even get you started. Look, I even put it all together for you. Gosh. If I go any further, there'll be nothing for you to do. I almost do it all for you. Almost. And then I give you a hint what the dollar amount should be at the end of December. Okay? Now you go and do it. Okay. Let me go to today's topic. What is today's topic? What is chapter 10? This week's topic? Budgeting. We did budgeting in 2071, but my problems have to be a little more difficult. Well, I just showed you the quiz. I give you a lot of help in the quiz. And if you'll look at it before Wednesday, on Wednesday, I'll answer some questions depending on the question, okay? Because Don and I will be out of town this weekend. There'll be no help, okay? Now, the budget. The budget, we need to talk about the time period. The time period for the budget. Well, this Excel file that I'm giving you is taken from the chapter. All of my files are taken from the material in the chapter. Each one of these yellow sections is an exhibit in the chapter. So if we turn to the chapter, we see all of these exhibits, and it goes down to 350 lines. So there's about 300 lines here. Okay, so it's quite a few lines, and we're taking up the entire screen. Well, let's look at the textbook. We're talking about the period of time the budget covers. I've got 3 months up here, straight out of the textbook, 3 months. The conceptual question, do not answer 3 months. And that's what I gave you, and that's what's in the textbook. What is the typical period of time for a budget? 12 months. And you say, well, why didn't they put 12 months in the book? Well, try to imagine if they had to put 12 columns, they wouldn't have gotten it on the page. And if they had flipped it landscape, that chapter would have been 3 times longer. So when they gave you the example of a budget in the chapter, in order to limit the space, they limited the budget to 3 months. But don't say that when you're answering the conceptual question. A budget is usually 12 months. That's the answer. Having said that, could it be 9 months? Could it be 15 months? Could it be 3 months? It could. It could. But that's not the accepted answer. The accepted answer for the time period of a budget is 3. It's 12 months. Almost fell into it. Okay, it's 12 months. Now, if we go back in history, and you may respond, let's worry about today and the future. But there's still many firms stuck in budgeting that was developed 20, 30 years ago. Budgeting has changed, so we've got to handle both situations. If we go back in history, firms prepared the budget how often, historically, how often within the fiscal year? Let's say calendar and fiscal are the same. So within that 1 year period, how often did a firm prepare their budget? Historically. Once. They did it once. And why did they do it just once? It was a tremendous chore putting the budget together. Let's go over the road to Siemens. Siemens, their accounting department for Their American organization is based here opposite the campus. Marketing and accounting. So if the accounting people are going to put together a budget at Siemens, and you need the input from the managers, how often can you get input from managers and not become extremely unpopular with them? You're only going to get probably one chance a year to get them to come to Orlando, sit in a room, and talk about accounting. So logistically, it was very difficult to do the budget, this budget process, putting the numbers together more than once a year. So we did it once. And when did we do it? Assuming the year starts in January, we would do the budgeting in October, November. Okay? So we did it once for the entire following 12 months. Along comes technology. And I'm going to show it to you, but hopefully we'll get to it today. Technology, specifically Excel, there's a wonderful feature in Excel that will facilitate doing the budget as often as you want to. So today, and I went over and watched Siemens actually do it on a Friday afternoon about 12 years ago, 15 years ago, a long time ago. They're doing the budget every month. So when 1 month drops off, we always have 12 months in the budget. When 1 month drops off, we add the next month. Technology has facilitated it. Now, what type of budgeting is that called? What's the expression in the chapter when you've always got 12 months in the budget? Expression? A rolling budget or a continuous budget. Both expressions are used. Rolling or continuous. Historically, it was just a static budget. The word was static. It remained as the budget for 12 months. Now, every month, we're able to change the budget. So, how did technology facilitate this? Let me just recall again. 30, 40 years ago, and many firms still today, because they don't know how to use Excel. Siemens is very good at Excel. 20, 30, 40 years ago, and many firms still to this day, they do the budget once. Why are they limited to once? Because you can't bring the managers together to talk about the budgeting more than once a year. You try to do it and they're not going to be very helpful. Just the dysfunctional behavior. And when you do get the managers together, how long can you keep them for? You can't keep them for more than a week. It's usually less than a week. 2 or 3 days is the most time you can keep the managers before they've got to go back to their center of operations. We need their input. Whose budget is it? Is it the budget of us accountants or the budget of the managers? Who does the budget belong to? The managers. And in most firms, who does the budget belong to? The managers or us accountants in most firms? Us accountants. Because who dreams up the numbers? The accountants or the managers? No, in most firms, who's doing it? We are. We're putting the numbers together because we can't get the input from the managers. We can't get the managers together. So how did Siemens do it? How did Siemens do it? They have the budget model sitting on their server. And all the managers, and I went over and watched them, and I watched people in Philadelphia, in Hong Kong, in Brazil. I watched them logging in. Here's how they did it. No add-in, share workbook. Now, I don't expect in my afternoon class, but the evening class, usually 3 or 4 people. How many people have seen share workbook? 1? 2, 3. Okay, so yeah, normally in the evening class I'll get a few people put their hands up, but for most people this is new. Share workbook is budgeting in 2014. This is how it's done today. What does share workbook allow you to do? Well, if you'll just imagine, she's in Brazil, she's in Hong Kong, He's in Philadelphia. I'm over the road. I have the workbook. There's only one workbook. I have it. It's on a server. They have password access, so all the security's in place, and they can open up the same workbook. And you say, what's the big deal about that? Well, here's what the big deal is. And Microsoft has perfected this. That the first person that opens a document is the only person who can read, it's called read-write to the document. You can't have multiple people opening a document, writing to it, and saving it, because you'll have chaos. So all around the world, Windows only allows, doesn't matter whose operating system, Russian, American, doesn't matter whose operating system, Apple or Microsoft, only one person can read and write to the document. If that wasn't true, you'd have chaos. Well, when you're doing budgeting, I need Brazil, Hong Kong, I need Philadelphia to change the numbers in the budget and save it. And that was the technical difficulty. Well, to accomplish that, you have to make use of this share workbook. Now, let me come out. At the moment, this workbook is not shared. By default, whenever you create a workbook, it is not shared. That's the default. To make it share, you have to specifically do something. You've got to check that box. And you say, that's all? That's all. So once you have checked that box, let's look at this big scroll area. There's only one person in this scroll area, and which computer is it? This one right here. It's this machine right here. That's that machine right there. So as Hong Kong, as Brazil, as Philadelphia logs on, what's going to happen? They're going to appear. So I'll be able to see people logging in. Well, if this is a scroll box, how many people can log in? 1, 10, 100, what do you think? A lot. You can have a lot of people. And there is a limitation, but I don't know what it is off the top of my head. Okay, but it's probably 255 is probably the limitation. It's going to be a lot. So, all managers around the world can log in. So when I was over at Siemens, I watched as they started to log in. Now, let's come over here, advanced. Yeah, this will start to make sense to you. Come over here, track changes. If you're going to let people log into your workbook and make changes to it, this workbook belongs to you and me, the accountants. If you're going to let people in Philadelphia, around the world, log in and make changes to it, it would behove you to keep the history. Because you do not want to go into the chairman's office, the president's office, and open up the workbook to look at cash flow, and those weren't the numbers last week. Who's changed the numbers? So you had better keep a history of all changes to this workbook, and Excel will track it for you. Now, the default is keep it for 30 days. That's the default. That's the default. You can increase the number of days. Now, update the changes. I always set it to 5 minutes. So what's going to happen is as the changes are being made in Hong Kong and Brazil and Philadelphia, all the people that are logged on, as they're making the changes, every 5 minutes, Excel that's sitting over the road, the main copy, will take all the managers' changes they're making, consolidate it into the master workbook, and then send it back where? Back up to the manager's monitors. So everybody can see what is going on around the world, around the corporation. Now, What's the benefit of this? Managers did not have to do what? They didn't have to physically come to Orlando. And Microsoft has perfected that in Excel, and they call it Share Workbook. Damn them, I wish they'd called it budgeting. I'm joking with you, because it's really important for budgeting, but so do engineers need it. So do people in chemistry and physics and R&D. So there's many other areas that also need this feature, but we're probably the biggest users, okay? But they didn't call it budgeting, they called it Share Workbook. Share Workbook. Okay, now conflict down here. Let's assume two people, Brazil, Philadelphia, both trying to change the same cell. Could happen, couldn't it? Well, use a little bit of creativity. Let's get out of here. How could you stop managers changing the same cell? They shouldn't have to be changing the same cell. This is Brazil, this is they shouldn't be working on the same module. So what could we do? What could we do with each manager? Put them on a separate sheet, put them on a separate tab, a separate sheet, and password protect the sheet. So Brazil knows their password, Philadelphia knows their password. You can't change another manager's sheet. So Microsoft thought of even the conflict when two managers, when two people are trying to change the same cell. Okay, summarize. Budgeting. The time period, usually 1 year. The budget, is it a static budget or a continuous budget today in 2040? It's a continuous. Another word for that is a revolving budget. Continuous budget. Now, what's facilitated that we could go to a continuous budget? This technology, Share Workbook. We can have the managers not get on a plane and come to Orlando, which they're not going to want to do. Nobody wants to come talk to us accountants. You ever see movies made with accountants as the main actor? I've never seen an action movie where a CPA is out killing people. Did anybody see the movie? Does anybody know the movie Death Wish?
Yes.
An old, very old movie. Well, it's from a book. Does anyone know the story? You know the story? No, I'll tell you the story. Okay. Charles Bronson, tough boy. Unfortunately, he's dead, but he was one of these tough actors. Well, Death Wish was a book. The character in the book was a CPA. And the character in the book was a vigilante guy in New York City that his daughter had been raped and murdered. So Charles Bronson took it on as the character in the book. Subsequently, Charles Bronson went out looking for bad people committing crime. To heck with the police and the law system. He took the law into his own hands and dealt with them. So you can imagine what he did. Well, when they created the movie, and this was well written out, a CPA? Vigilante? No way. So they made him a town planner. But it followed the book with the exception of one thing, the job. Couldn't be a CPA, had to be a town planner. Even though town planners were exciting people like. But anyway, so what would probably happen in the real world, and I just took this, as you know, out of the text, the chapter, is we would put each one of these exhibits on a separate sheet. On a separate sheet so that the manager, with the use of Share Workbooks, could alter their budget. So that's the big difference between what I've got here and what you see at Siemens. The other thing is, let's look at the simplicity of what's here. There's only one product, one price. You know a firm with one product, one price? A firm has hundreds, thousands of products. So just the marketing exhibit here would take up many rows, many columns, a separate sheet, just for the marketing people. Okay, so we've dealt with setting up this budget. Multiple sheets, share workbooks, the time period. We start up here with sales budget, first exhibit, and we scroll all the way down, look, direct labor, factory overhead, cost of goods manufactured. We finally get down to the cash budget. And then we get to the income statement and the balance sheet, okay? Then we're at the end, balance sheet, okay? Now, here's the cash budget. What is the most important exhibit? Each one of those yellow areas on a separate sheet, which one is the most important? Cash or accrual accounting? When I say accrual accounting, what am I talking about? Income statement, balance sheet. What's the most important component up here, the most important exhibit? Cash or accrual accounting? Cash. That's true at Siemens, that's true with you and me. When was the last time you, for your apartment, did an income statement and a balance sheet? You never did. You had never done it. Neither have I. That must tell you something about the importance of the income statement and balance sheet. That you are always monitoring your cash. Even when you get as much cash as Bill Gates, you're still monitoring cash. Okay? More on that in a moment. Okay, so we understand what is in our budget. All of these modules. Exhibits, the word in the chapter. We come over to Excel, we normally say module. Now, what's the first thing we put together? The first module, what is the first step in the budgeting process? Where does it all start? Sales. It starts with the marketing projection. And that's why it's at the top. So once we know the units that are being sold, and once we know the price we're going to sell them for, that algebra right at the top is driving all the algebra below. So, when I took those exhibits out of the book, it took me an entire Saturday. I started early in the morning, finished late at night. I took the exhibits, I put all the algebra in here. You can see it. It's going to take me a lot of time. And where there wasn't a piece of algebra, I indicate here, assume, not calculate. Okay? Because the beginning inventory has to be the closing. But that number right there in the exhibit, there was nothing in the exhibit to tell me where it came from. So I just gave you a comment. Assume. I couldn't give you a formula there. It's not possible. So I put all the algebra in here. I'm not asking you, and you shouldn't, go looking over all the algebra because it's not going to serve any purpose, because each one of these problems, and I will do 2 of the problems in this chapter. Why? When you did ABC, when you did cost, volume, profit, when you did one of those problems, let's say it was traditional single product, multi-product ABC, multi-product, once you've done one of the problems, you've done them all. Think about it. I mentioned this once before. Once you've done one ABC problem, you've done them all. Okay? But in this chapter, chapter 10, no 2 problems are the same. So, there's little to be gained by looking at all this algebra, because it won't serve any purpose when we come over here to do two problems. So I am going to do two problems taken from the multiple choice, the two most difficult ones. You see what I'm going to do in this chapter? Now, but I did go to the trouble of giving you the file with all the algebra in place so you realize that when you go to work for a firm, you've got to build all this. But you only have to do it how many times? Just once. It is a big job. It took me all day, an entire Saturday, to put it all together. Okay, and all the comments and make it look nice. Now, summarize. Budget. Period of time, 12 months. Where does it start? Marketing projection. We're going to deal with the trap question in a moment on the marketing projection. Today, this budgeting is not done once a year, a static budget. It's done every month. It's called a continuous or rolling budget. Now, what is the trap? I asked you, when we do this budget process, where do we start? And you answered it correctly by saying the marketing projection. There'll be a conceptual question that'll come up, it'll be worded differently a couple of times, but it's the same question. What is the exception? What is the exception to starting with the marketing projection? When would you not start here?
If the expected value of doing that was lower, or like less than like the option to even test it out isn't worth it right now.
I think you're actually right, but that's not going to be the answer though. It's going to be a little more specific. How about all these charitable organizations feeding the homeless? Let's say we're Catholic Charities downtown and we've got a kitchen to feed homeless people. Now, we may have this demand, but we only have enough resources to provide this many meals. So the demand, the market, if you start with marketing, that may be the demand, but it's no good starting with the demand if you don't have enough resources. So, when do we not start with the marketing projection? When you've got limited resources to work with. So the correct answer is when there's limited resources. Now, an example of limited resources, most charity, most not-for-profit organizations. They rely on being given resources, and once you know your resources, that establishes the amount of service you can provide. Everyone okay on that question?
Yeah.
It's going to come up. Okay, let's keep going. Now, what are the three big benefits of budgeting? Three benefits. Now wait on. I know you're going to write down the three. They're in the book. And yes, conceptual questions will come up and ask the three. One of the reasons I let you do quizzes at home. I don't want you to memorize the three. I've got it memorized. Well, after 30 years, you do memorize a lot of this stuff. Folks, there's 12 textbooks on this topic. At least 12. If you come by the office, I've got them all piled up. This is the elite book. If you look at the books and you turn to this chapter, do they all say the same reason for the benefits of doing budgeting? Do you think they all agree on the same reasons? No. No. It's just an opinion of the author. That's why I don't want you to memorize it. But we are going to go over the three reasons for why firms do budgeting. Let's put it in context. Do successful firms have budgets?
Yes.
Wait on. do all successful firms have budgets?
No.
I suspect there are successful firms that are successful in spite of their poor accounting skills. Let's take General Motors. Did they get into trouble?
Yes.
Did they have a budget?
No.
I'm sure they had a budget. So, are there firms that are not successful or get into trouble and they have budgets? Yes. Are there firms that get into trouble and don't have budgets? Yes. So you've got all situations. Successful firms that have budgets, successful firms who don't have budgets. And how can I justify doing all this work? How can I justify getting all the managers to put their effort into preparing a budget? And that's the pullback, the pushback you're going to get from managers. Why do it? Why should we do it? Can you suggest reasons for why we should do a budget?
It's like a line of strategy, collective strategy for the organization.
Okay, the chapter is very clear. First reason, it compels, this is the word in the chapter, it compels managers to communicate and coordinate. Compels. Compels, the word compel means make you do something, right? It forces you to do something. So the word in the chapter is compels managers to communicate and coordinate. So if we've got, let's go down to Ford, Greenway Ford here on Colonial. If marketing is planning on a sale of F-150 trucks in December, who should marketing tell about that? This is the compelled. Compels managers to communicate and coordinate what? The decisions you're going to be making. So if marketing is planning on having a special promotion, a sales promotion on Ford F-150 trucks in December, the first 2 weekends in December, who should know about that? Purchasing, well, when you say purchasing, the people responsible for getting the trucks here, right? So the last week in November, I hope we'll have some tractor trailer units coming in with a bunch of trucks. F-150, you can't sell if you don't have it on the lot. So the people responsible for ordering those trucks need to know.